Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right then, it's time for a look at oil, and we're going to be using the CL2, which is the continuous next contract in front oil futures chart today. This is now my preferred chart, as I can get all of the various tools that I want to use and indicators available here where I can't necessarily in the WTI, and also having gone over the count several times with the WTI, the issue of going all the way back to zero has made the count problematic, and I do still have a backup which I can revisit, but for the moment I prefer the look and use of this chart. So essentially what we're dealing with, or what I think we're dealing with, and I will be the first to admit that the price action around the recent highs has become extremely choppy, extremely volatile and very difficult to negotiate. I'm going to put my best foot forward and show you the primary and my alternate counts, try and talk you through what I think is going on to some degree up here, but it is a bit, well, you'll see. Anyway, the basic idea is that we've had a wave 1 and a wave 2, nice and clear, a wave 3 and a wave 4, but after that we began to extend a fifth and final wave, with this being the 1 and the 2 of a lesser degree, and then a 3 and a 4 of a lesser degree, and now a fifth. Now the fifth itself could also be extended within the fifth wave, so it could be a bit of a blow off top. Now the thing with fifth waves in commodities, this isn't always the case, but it's far more frequent occurrence in the commodity market than it is in the equities market, and that is the price action of fifth waves can be extended more frequently than it will be in other markets, and this is due to the emotions driving that fifth and final wave. In the equities markets, traditionally the fifth wave will take price to a higher high, but it's mainly being driven by hope and a lot of retail investment belief that the market can continue to grind higher. Now, hope's a relatively powerful emotion, but it's got absolutely nothing on fear, and fear is what drives the fifth wave of a commodities market. Not all the time, but when we get that extended price action, that tends to be the reason. Now, what kind of things drive that fifth wave in the sense of it being fear driven? Well, war and inflation, the kind of fears which we're dealing with in our post-pandemic world at the moment, and the narrative fits. Now, I'm not saying that essentially has to be there, that you have to have a fundamental explanation, but the Elliott wave is an expression of humans doing human things and reacting in human ways, and that's represented within the various markets. And that's why, if you do see an extended fifth wave, you're more likely to see it here in the commodities market. So I do have an alternative where that's not the case, but for the moment I'm quite happy saying that's 1, 2, 3, 4, and then this is 1, 2, 3, 4 of a fifth. Right, we've covered the count from below multiple times, so let's just come in and look at the bit that everybody's struggling with, myself included, and try and make some sense of this. Okay, we'll deal with the Elliott wave count first, and then we'll look at some classic analysis as well. This needs to come down to sub-minute. Right, so I do have an alternate to this. This is the primary count, but I have an alternate primary count, which is the same idea expressed slightly differently. Okay, I think I might actually prefer the alternate primary, if you get my meaning, but we'll talk about that in a minute. So I see this essentially as a free wave move down, A, B, C. This becomes the A of a contracting triangle, not a particularly contracting triangle, not particularly nice symmetry, and not particularly nice subdivision either. So we're just going to come down to the hourly time frame here to try and walk through this a little clearer, but this is the best I can make of it. So we get a free wave move down in an ABC, zigzag into an A. We then get a 7 wave swing here, and this is our B wave. So rather than trying to force the A and the B in a position where it doesn't want to be, I simply take the first 5 as the A, and we get an extended A wave, B, and then a short C, 5 waves in the C as an impulse as well, creating another zigzag. We then get another zigzag for our C with an impulse in the A, 1, 2, 3, 4, 5, B, and then an ending diagonal for our, let me just, that's been locked for some reason. for our C. So another zigzag. We then get another zigzag, except this one is quite convoluted. We get a 5-wave move impulse in an A, and this is followed by a 5-wave impulse in the C as well, creating a zigzag. However, the intervening B wave is a flat. 3 here, and 5 in here, A, B, C. Now, it's a running flat. They're rarer than regular flats and expanded flats, but they do occur, and it is as a corrective element, connective element, as opposed to an entire correction. Now, you could try and count this as W, X, and Y. The problem with doing that is you're going to end up with an equally undesirable count, where the Y fails to push below where the W completed, and the purpose of the Y is to do that. So, depending on how you want to interpret it, I think the B wave flat here works perfectly well. So 5, 3, 5, a larger D wave, more convoluted, not a complex itself, not actually a WXY in itself. Perhaps you could label it WX, but then I don't see 3 waves here. Okay, so that completes the D, and then finally we just get another zigzag down in the E. This gives us a completion of our 4th wave at minor degree, and then we have an impulse here into a 1, zigzag into a 2, and now we're stepping up probably into an extension of the 3 of the 5th at minute degree, that is, 3rd wave at minute degree, and then we'll have the 4th, the 5th, and the minute degree leading to the 5th at minor degree, which is the 5th at intermediate degree, which is the 1 at primary degree, which will be the high before this whole thing rolls over. Okay, so that's the best I can do as a primary. Here's an alternate idea for the primary. Right. We're still dealing with a contracting triangle, but we complete it a little sooner. Okay, we completed a little sooner, and then instead of trying to include, and then what we can do here is, instead of including this as an additional move up, like we did if I show you in the primary again, so we go, D comes with inside of the B here, but finishes lower, so it is a legal contracting triangle. You could even perhaps look at this as a barrier triangle. Right, with the, let's just flatten this out, with the B and the D on the flat side, okay, and a rising trend line from underneath with A, C, and E being higher lows. Either way, it's not a particularly convincing triangle. The alternate idea is that we've gone A, B, C, D, E to here, and then we've gone, this would have to be counted as a zigzag now with an extended C, and we've gone 1, 2, 3, 4, 5, or I suppose being a leading diagonal we could count it as 5. Okay, so 5, 3, 5, 3, we could do that as well. Or we could try and subdivide it as zigzags, which I think you could argue, honestly you could argue either way. If this is the case, we will have a more significant correction and break down deeper. If the primary is correct, then we will not come back beyond 108.91, which is the bottom of my 2 here, and we should continue to extend higher. It really is a little tricky. That's the primary idea and an alternate for the primary idea, and then we've got the actual alternate. Okay, because of the action, this is just, price action is just a bit of a convoluted mess. So here I've gone for a flat, an ABC that will complete in 3 waves. We're going to have to come out into the 4 hour here, I think, so we can see the whole thing. But the idea is that this 3 wave move down was an A, then we're going to have a B wave, and then we're going to have 5 down in a C after we retrace at least 90% of this initial move down in the A, and we'll end up with a flat 3, 3, 5. Now, it's a, like I said, it's a bit of a convoluted mess, but the best I can make of it is 3 down here into an A. Then we've got a W, X, and a Y for our B, and it's subdivided as the 7 wave swing here, but as a 5, 3, 5 with a shortened C, extended A, and a zigzag. We have the same zigzag again here in an X wave, where we've got 5 in an impulse and an A, and a diagonal here in the C, which is basically the same as the primary count. This concludes our X wave, 3 waves down as a zigzag into the X, and then we get a very long and extended C wave in a Y, where we've gone A, B, C as a diagonal, again completing as the C. I have this currently as incomplete since it has not retraced sufficiently the 90% to be a flat pattern yet. Yeah, so not very pretty. 3 to there, 3 to there, and a huge 3 to here. Bum bum bum. Like that. And that is the alternate really, guys. So not the clearest Elliott wave picture at all at the moment. I'm not convinced, honestly, either way. And when I look at the technicals, let's do some classical analysis for the moment. What I notice is, let's bring up the RSI for a moment. Let's come out to the daytime frame. Let's just calm this down. So let's take, now this is not an established high. We have not had a reversal here yet. This is just the current price action. But if we do take the previous high and the current price action, we have quite a strong divergence. Now it's not a true divergence because we haven't made a new high yet. You see what I'm saying? We haven't come above the previous high. If we had, that would be divergence in the RSI between previous highs and current price action, but we could still do it. We could still undo that and push that RSI higher, and even if we do push higher in reverse, it won't necessarily result in divergence, but it does appear weaker for the meantime. Same with the MACD, appears slightly weaker as well. Okay. The unbalanced volume, however, continues to climb. You know, this is the accumulation of positive days in the volume continuing to be added to the equation over time, and because we've had a lot of sideways movement where there hasn't particularly been that many negative closes due to a series of rising lows, low, rising low, rising low, rising low, rising low, rising low, right? So overall we still appear quite positive, and we don't, not necessarily showing any clear weakness either way at the moment. Moving averages wise, we've had the 60 exponential moving average, the orange line here, propping up price on the daily as we move along. Right. Okay, so volume also, I wanted to point this out. If we just take a look at the volume, remove the indicators for a minute, we can see how between the recent high and the current price action we've had declining volume, significantly so. Okay, volume's been dropping off, price has been gradually meandering higher. This, to me, feels more corrective than motive, feels more corrective than impulsive. So if this was an A, you know, then maybe this will be a B, but it's got to look for that 90%, and that will be declining volume in the B, weakening momentum, potentially getting that bearish divergence in the RSI if we get another high, because it could be a B wave which goes to 101%, it could be 123.6%, it could be an extended target for a B wave in a flat, and then you're going to get the 5 down here. However, if this is an extended fifth within a fifth, then this could be a series of 1s and 2s until finally we start to rocket out of here. I am really at a bit of a crossroads with this one. I'm sorry if I'm not being much use to you at the moment. It is convoluted and confusing price action. The classical analysis suggests to me that this looks like a bit of a B wave rally or some kind of corrective element as opposed to a motive one. So if we have gone down, this is likely corrective and we're going to come down. Now, I'm not going to discard the primary until it's invalidated because it still works. This still has as much believable analysis to being a triangle as it does to being anything else. So if things break down from here, we can reconsider, but if we do press on to new highs, we'll stick with the primary count and see how it develops. So oil's at a bit of a crossroads, we're just waiting for it to shake itself out. So let's now look at, we've looked at the, what was that one? That doesn't matter, we'll look at that, everything else changes. Long-term count, quick reminder then, so primary, whether you choose that correction for the triangle or that correction, right, we're going to continue higher, and we've completed a wave 4 at minor degree, pushing up into the 5th. The alternate is that we've already completed a primary 1. Okay, and now let's have a look at how this counts differently from the lows, because I didn't think I covered that earlier. So a quick look at how this counts from the lows. We get the same 1, 2, but we get a different 3 and a different 3 into 4, or a different fourth wave. Okay, we get a flat pattern, A, B, and C here. That's our fourth. We get a blow-off fifth on its own, but it doesn't extend any further. It's still the biggest wave overall, more than 131.8% the length of 3 when we measure it. So it's still a big 5, and that completes our primary 1. Now from there, we get all of this mess where we're saying potentially A, potentially B, potentially C. Right, big breakdown, and then move higher. I need to see more before I change my mind, but like I said, I don't have much faith in the primary, but I don't have much faith in the alternate either at the moment. I need to see more price data, as it has been a very ugly time here at the highs. I sound like I'm being a little pessimistic here, where I think my guts are telling me, or at least suggesting to me, that this whole thing feels like a top, feels more corrective, but we're just going to have to wait and see, guys. Okay, so hopefully maybe next time I revisit oil I'll have something a bit more helpful for you, but that's the best I can dig out of this mess at the top at the moment. There might be something really clear and really obvious that I'm missing, so if there is, feel free to post. Now, if you like what you've seen and you're new to the channel, please feel free to subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. And as always, a huge thank you to my Patreon subscribers. Your support is greatly appreciated, and if you are interested in joining the Patreon, it is early in the month and that's the best time to do it. Follow the link in the description box below, head over, have a read of the tiers, see if there's anything you're interested in, and feel free to sign up. Also, if you're not following me on Twitter yet, please do so, as I announce new videos that are released on YouTube on Twitter. Alright guys, take care of yourself, and I'll be back with you tomorrow. All the best, bye bye.